Welcome to 321 study. This is audit and assurance paper. Today we'll be looking at assurance and non-assurance engagement. As we go through this, we will be discussing assurance services, giving examples like external audit engagement, talk about review engagement. We will also talk about some other examples like special engagements like due diligence engagement. We will also hint on review of both historical financial statement and interim financial statement. Then we will look at other related services and round up our discussion with looking at non-assurance engagement. So let's start with this diagram that summarizes professional services that accounting practitioners do render to their clients. I'm sure you are aware of you'll be aware of one or two professional accounting firms out there. These professional accounting firms render a whole lot of services, especially the big four firms. They render possibly hundreds of services to their clients. So a lot of people do think that professional accounting firms render just audit services, but no, they render a whole lot of services. But these services, which I will refer to here as professional services, can be categorized into two. Okay, professional services can be categorized into two: the assurance services, or what we have here as assurance engagements, and the non-assurance engagements. Okay, so in other words, all services that could be rendered by professional accounting firm, what you can call a practicing firm, could be categorized into these two broad areas. Those ones that require the accounting firms to provide assurance to their client, we call them assurance engagement. And the other, the opposite of it, being those that where the accounting practitioner is not required to provide any opinion or assurance to the client, we call those ones give them a broad term, non-assurance services. But this diagram is further showing us that under assurance engagement, okay, we could have assurance engagement performed on historical financial information. Historical financial information such as an entity's financial statement. Okay, the financial statement of an entity contains past information, historical financial information. So, and we are saying if a practitioner is called upon to come and provide assurance service on historical financial information, it could either be a reasonable assurance engagement, or he will be providing a limited assurance engagement. So either this or this on historical financial information. So if ABC Limited call upon you to come and examine and give assurance on their financial statement for a particular year, probably the first question you ask is whether they need, what level of assurance do they need? If they need a high level of assurance, then that means we will be providing this reasonable assurance engagement. If the level of assurance they need is low, we will be providing to them limited assurance engagement. And that's why for this reasonable assurance engagement, we are giving a clear example of it: statutory external audit. Of course, in every statutory external audit, which is usually backed by law, like in Nigeria, the Company and Land Matters Act provides that every company here should have an annual audit exercise. That is what we are referring to here as statutory external audit. And if you look at the provisions of the law, it requires that a high level of assurance is given in every statutory external audit. So that's why we're giving that as an example of what we call reasonable assurance, which is the one that we call high level of assurance. Okay, But we could also have an alternative to that assurance level, which is the limited assurance. And that limited assurance can be provided in a review engagement, what you can call review engagement. Review engagement could be performed on several, financial reports, including historical financial statement. So the historical financial statement of an entity, they could call a practicing firm to provide limited assurance on it too. So similar to the other one, but I will be giving you a clearer picture of the differences between this A and B, reasonable assurance engagement and limited assurance engagement, in the next few minutes. So assurance, if you look at the table again, having looked at historical financial statement, if you look at this, the right hand side of it, this is also talking about other information, other reports, where the accounting practitioner could be called upon also to provide assurance. And these other reports, there are many of them that where an accounting practitioner could be called upon to provide assurance on. I just gave one example here, PFI, prospective financial information. Okay, a company could prepare prospective financial information and call upon you to come and examine it. When we say prospective financial information, we are looking at those reports that are prepared, for the future. Something like profit forecast, cash flow forecast. So an entity could prepare a profit forecast and call an audit firm or an accounting, practitioner to come and examine such profit forecast and give opinion on it. So that is what we have here, other information. We could also have other kind of services that can fall under this. They can fall under this. If a due diligence assignment is being performed as an assurance engagement, it will fall under this. Okay, and a whole lot of other services that an accounting practitioner could be called upon to give opinion on, and we'll be mentioning a lot of them in the next few minutes. Then, if we talk about the non-assurance engagement, which you and I will also look at in more detail, is saying, these are basically those services where the client that is engaging you does not require you to give any form of opinion. Now, we have two good examples here of what we call non-assurance engagement. Here we have compilation engagement, which you and I will be discussing in detail later today. Then you have another one called agreed upon procedure engagement. So in line with the standard, these two kind of services fall under what we refer to as non-assurance engagement, because the accounting practitioner rendering any of these two services is never required to provide any opinion or conclusion on them. So that's the summary of what this diagram is talking about, the services, the professional services that accounting practitioners render globally. Now let's go into bits of it in more detail. Now let's start. We have been mentioning assurance engagement. Let's start. What is then assurance engagement? I try to give it a simple definition by saying that assurance engagement is that engagement where the accounting practitioner is required to provide an opinion or a conclusion on a report given to him by the entity, okay, by the client. So whichever report, whichever be for financial information where the job requires the accounting practitioner to give opinion, then we can simply say that is an assurance engagement. But we can give it a more proper definition when we say assurance engagement. If you look at the definition in the standard, international standard on assurance engagement 3000, it says that assurance engagement is that engagement where the accounting practitioner is required to evaluate a subject matter against suitable criteria, with the objective of giving an opinion or conclusion that would enhance the confidence, the degree of confidence of the intended users. If I look at that definition, this definition contains bits of elements of what you can call assurance engagement. And the popular exam question, we have seen that happen in the exams in the past, where the examiner will be asking candidates to explain the key elements of assurance engagement. So I will take you through that 5 key elements of assurance engagement. I will take my assurance engagement here to be AE, 5 key elements of assurance engagement. 5 of them, and all of them are mentioned in that definition. One is that in every assurance engagement, there will be minimum of 3-party relationship. So in assurance engagement, you will have 3-party relationship. 3-party relationship. Okay, then I will explain that shortly. Another key element of assurance engagement is that an assurance engagement will have a suitable criteria. Suitable criteria. An assurance engagement will also have a subject matter. Then assurance engagement will also have sufficient gathering of sufficient appropriate evidence. And lastly, every assurance engagement will have a written assurance report. These are the 5 elements of assurance engagement. So I'll go through them as follows, starting with the first one, 3-party relationship. To drive the point home here, I want you to make an assumption. Assume that a very good example of an assurance engagement is statutory external audit, which I mentioned to you while I was explaining the diagram. So if we say statutory external audit, so I want to make my explanations from the point of view of statutory external audit. But of course, statutory external audit is the most popular assurance engagement around the world. So let's look at the first one, 3-party relationship. What we're saying, in every assurance engagement, you find minimum of 3 parties. And these 3 parties are, you have the responsible party. The responsible party. Then you have the intended user. And then you have the practitioner, the accounting practitioner. These are the 3 parties we are talking about. The responsible party here, looking at statutory external audit, which we are using as an example, the responsible party here will be the preparers of the financial information, and that will be the directors of the company. It is the directors of the company that prepare the financial statement. If we want to make it very specific, it becomes the CFO or the financial director of the company. So, but the directors are the responsible party, the party that is responsible for preparing the financial information. Then you have the intended users, and who are those that use the financial statement? Of course, the shareholders of the company, okay, are the primary users, even though we could have investors, we could have regulators, we could have lenders who are also interested users of the subject matter of engagement, the financial information. Then You also, in every assurance engagement, you have the practitioner. The practitioner is that independent person or group that are called upon to examine that subject matter and provide opinion on it. And here, again, we have the auditor. So, the three-party relationship we have in every assurance engagement, taking statutory audit as an example, will be the directors of the company standing on one end, who are the ones that prepare the financial statement, then the intended user of the financial statement, the shareholders, and the independent party that provides opinion on it, you and I, the auditor. Okay? Now, you also have other elements, the suitable criteria, and the subject matter. Let me take the subject matter first to enable you to understand the suitable criteria. The subject matter of an assurance engagement, if we are taking statutory audit to be, will be the financial statement, the subject matter, the focus, okay, of the assignment. The assignment is focused on something, the subject matter, and in this instance, the subject matter will be the financial statement. The financial statement. What is it? What is the report? What is that report that is being, or that financial information that is, to be audited, that is to be examined? That is what the subject matter information is. So, and every assurance engagement will have a subject matter information. There will be a report. So, in this instance, the financial statement. But in some other instances, it might not be the financial statement. It might be internal control report. It might be corporate governance report. Could be a whole lot of things depending on the kind of assignment. Then the suitable criteria will be the basis for judgment, because the accounting practitioner is not going to look at this subject matter, the financial statement, and say it is correct or not correct just from his head. He's not going to do that based on assumption. He's going to do that, he's going to give opinion on this financial statement or the subject matter when he has matched this against a criteria for judgment. And that's what we're calling suitable criteria. A criteria that is, acceptable within that environment, within that jurisdiction. And for us here in Nigeria, our suitable criteria, our basis for measuring or evaluating the financial statement is the accounting standard. Okay? The applicable financial reporting framework. The accounting standard. In this instance, in Nigeria, we are using IFRS. So, before the auditor could say, oh, the financial statement show a true and fair view or not, he would have evaluated it against the IFRS, which in this instance is our suitable criteria. Okay? Then we have number 4 to be sufficient appropriate evidence. In every assurance engagement, there will be the accounting practitioner must gather, collate, and analyze evidences. And those evidences must be both sufficient and appropriate, which you and I, sufficiency and appropriateness is elements of audit evidence that are a requirement of ISA 500, which you and I will talk about more when we look at audit evidence. So there is no assurance engagement out there where the accounting practitioner will not collate and analyze evidences. And that's what this 4th element is talking about. And the last element here is that there will be a written report. This is this written report that will contain the practitioner's opinion or conclusion. The opinion or conclusion, that assurance that is given comes in the form of opinion or conclusion. Of course, every assurance engagement means that the accounting practitioner is to provide assurance. So and I'm saying that assurance comes in the form of opinion or conclusion. That opinion will be expressed in a written report. So there is no assurance engagement out there where you will not see a written report. All right. So this explains the 5 elements of assurance engagement. And like I said earlier, is the popular area that examiners are usually interested in. Now, let's go to levels of assurance. You have a small table here that tries to explain levels of assurance. even though I have 4 levels here, level 1, 2, 3, 4. Level 1, 2, 3, 4. In reality, we have only 2 levels of assurance, and that is this and this. Reasonable assurance level and limited assurance level. Those are the 2 levels of assurance that are available in reality, and I will explain that straight away. Look at the first one. What we have here as absolute assurance. Absolute assurance means that the practitioner is going to give 100% guarantee on the financial report, and that is not available anywhere. There's no accounting practitioner that's going to give you 100% guarantee on any report you present to him. No matter how much you pay or the length of time you give, it is rarely available for the accounting practitioner to provide to you 100% assurance. It is probably only God that can give somebody 100% assurance on anything. If not for any reason, the accounting practitioner himself is a human being, and you know that human beings are prone to errors. Even the people that prepared that financial report, are also human beings, and they might have made 1 or 2 mistakes. So it will be almost impossible for the accounting practitioner to provide 100% guarantee. And that's why we're saying here that not offered by accounting practitioners. Okay? But maybe one can think that, what if they are engaging us to come and confirm a particular assertion where the sample size, where the size of what to be confirmed is not that much. Let's say an entity that bought 10 motor vehicles during the year, and they just want us to come and confirm the existence of those motor vehicles. Of course, we can go to the car park or wherever those motor vehicles are parked and confirm its existence, just because the assignment is just talking about only a particular assertion, existence. But when we're talking about an entire financial report, to give opinion on an entire financial report, it's impracticable for the auditor to give 100% assurance. Now, we said, if this 100% assurance is not possible, why not let's offer something below? And that's why accounting practitioners worldwide, what they offer is something below 100%, because we are not God. And that's the one we call high level assurance, reasonable assurance, which is high enough but not up to 100%. So, and a good example of the source of this kind of assignment is what we have been talking about, statutory external audit. When the auditor is engaged to perform statutory external audit, he is expected to give a high level of assurance. Maybe something in the range of 60, 70, 80, 90%, possibly even up to 99%, but can never be 100%. And at the end, the auditor will issue a written report that contains a positive opinion. I will explain what this positive opinion means in my next session. But when the auditor is engaged to perform a reasonable assurance engagement, then he will give an opinion that is known as positive opinion. Some people refer to it as also positive assurance. Outside that, where the auditor cannot, because of limitations, because of restrictions and all that, or because of time factor, the auditor cannot offer reasonable or high level assurance, he can go a bit below and offer limited assurance level. So, and that's why you have this limited assurance here described as low level assurance. Low level is a kind of engagement, that does not give assurance up to the level of reasonable assurance, but it gives an assurance level that we can describe to be meaningful. It is, yes, quite low, but clearly meaningful. Because it satisfies the client. It helps to give them let's say enhance their confidence on that financial statement, which is actually the purpose of every assurance engagement. But the confidence level might not be as high as when you are offering reasonable assurance engagement. So, and we have here that it is when you are called upon to perform a review engagement that you give low level assurance. Okay, If the auditor is called upon to do review engagement, that review engagement might be on historical financial statement, it might be on interim financial statement, or some other report, and the auditor would be giving or performing limited assurance engagement where he will end up giving a negative opinion or negative conclusion. If you look at the last one says no assurance engagement. Okay, this no assurance, remember I'm talking about level of assurance. This no assurance, if I'm saying I'm talking about levels of assurance, look at it, we're talking about levels of assurance, and I'm saying this one is no assurance. It means that there's actually no level. Okay, so I just put here for the purpose of helping to understand. And if you look at this, it is when we perform this non-assurance engagement, which I refer to as, I gave example as agreed upon procedure engagement or compilation engagement, that we we end up giving no assurance. No opinion is given when we're performing any of those assignments. So if you look at, you can actually consider this as a continuum from ground zero up to 100. So here is zero assurance, while here is 100% assurance. Okay, so why the two levels of assurance that stand in between, reasonable assurance and limited assurance, provide something that, actually two types of assurance that clients, entities engage auditors for. Remember also that limited assurance are sometimes referred to as moderate assurance. So if you hear the term moderate assurance, it's actually referring to this one, limited assurance or low level assurance. Just like I said, reasonable assurance is also referred to as high level assurance. So I will be explaining, in the next session, I will be explaining more on positive opinion and negative opinion, trying to differentiate the two for you so that you'll be able to deal with that. Thank you very much for listening to this session.